Good morning, Money Map Press. I hope you guys enjoyed that 15 minutes with Kenny Glick. Many of you are going to be going over to his world right now. But right now in the main room, we have Tom Gentile. This is my first time with Tom. I'm kind of excited about it, and you guys should be as well. So let's bring him in 5, 4, 3, 2.
Hey everybody, good morning. Tom Gentile here. It is Monday, December 13th, 2021. Welcome to the opening bell. Welcome to Power Profit Trades. And I want to welcome all of our new members. Heard a few of you hanging out in here during the Monday Morning Live session. So welcome to all of you that are new. And also welcome back to my YouTube channel at tomsoptiontools.com. Eric, good morning.
Yeah. Good morning, Tom. I'm excited to be here with you, man. I can't wait to see what you do.
Dude, you know what? Typically I come in here and I'm all amped up, and something happened this weekend. I don't know how. I managed to get sick. I mean, I do everything I can. I'll wear a mask sometimes when I've got some, we've got the clubbers. That's the AKA my kids that happen to go out every once in a while. I don't know what happened. I think I got a little touch of the flu, my man.
I think you got to start wearing the mask in the house as well with these kids. This is
I'm telling you.
But we hope you feel better.
It is so good. It's so good to have you on the program. You and I are going to be bumping back and forth. A little Q&A here and there. So I know you're a big crypto guy, and that's exciting to have you in here to help out with our crypto stuff. But I'll tell you what, you're gonna tell me a little bit about your world of crypto. I'm going to tell you a little bit of my world of stocks and options. So exciting to have you on the program, buddy.
Thanks for having me. I'm looking forward to it. Have a great show. I'm here if you need me.
Awesome. So guys, first thing I want to talk about is let's get into what we're going to cover on the program today. So Mondays, typically I use Mondays as Money Calendar Monday. We're going to go through the Money Calendar. I want to go through and do a full outlook with you. What's cheap and expensive? All right. So we're going to take a look at the Tom's Option Tools app that all of you in this room have access to. You at least have access to the list that I'm going to be sharing with you as well. And here we are. We're only a couple weeks away from Christmas. All right. And we're actually unofficially breaking into the holiday season, at least the full week heading into Christmas next week. So let's take a look at the holiday trader and see if there is anything out there that we could look at in terms of patterns. So that is the plan for today. And I apologize off the bat. I'm not coming in here with the high voice today. I got a little bit I'm a little sweaty this morning because, got that low grade fever going on. I will let you know also, I am basically canceling everything else I'm doing today. So, this afternoon's 1 p.m. show that I typically do, I'm going to take a little breather on that one, guys. So again, apologize to you ahead of time, but let's go ahead and get rolling here. All right. So before we get to the outlook, all right, I was kind of perusing and seeing what was going on in the news here today as we come into the day. I take a look at the news. Typically, I'm up around that 7 to 8 a.m. Time frame. Those of you that know me, I live in an Italian household, and the Italians in my household don't go to sleep until 2-3 o'clock in the morning. So, I live with vampires. What can I say? But anyway, got up, take a look at what's going on here, and I can see that, we see really that reek of storms that came across the middle part of the country. I mean, they're saying 80 people now presumed dead with this rash of tornadoes. I was actually looking at a graph of this, and a lot of you probably saw this. Absolutely insane. I've never seen so many dots on the map of the U.S. with that much destruction that came through. And if you're in the middle of that, we're feeling for you. We are definitely feeling for you. And I hope that those of you that were affected by this come out of that A-OK. Boris Johnson, that's the other big thing that's going on. One patient's died of Omicron. I think there's talking about a double effect happening every 2 to 3 days. What's amazing is that when you see negative news, and I'm talking about how logically this could affect the stock market. Fauci says Americans must have to deal with more booster shots. Now we've got a couple of other things on here too that are, but you could see this top six, and you would think immediately, the market's going to be down heavy on this news. But when you go look at the stock market, here's what we got right now. I mean, we've got the S&P, SPY, down all of 0.1%, 0.1, not 1%, 0.1%. So I'm here to tell you, and this is what you're going to learn from me, is that not everything that you and I think is going to happen to the market is going to happen. The market is a very fickle beast, and it typically does the opposite of what you and I expect it to do. I saw a couple of you on the chat earlier this morning talking about, was the Fed going to hike in 2022? Some of you believe it is. Some of you believe we're going to see 1 or 2 hikes. Some of you believe that with Omicron and all the negative news that's coming out, that the Fed just cannot be in the position to hike. I don't think to hike or not to hike is going to move this market much at all. We might get a quick move off the bottom or off the top, but I don't think it's going to last very long at all. The market just has so much money being pumped into it right now. The big news story that you heard this morning, Apple is approaching that $3 trillion market cap. Absolutely insane. I mean, who would have thought that a company that has iPhones, all right, as you and I, when we think of Apple, we all think of iPhones. If you thought about Apple, even 10, 20 years ago, we thought computers. Now it is an entertainment and more of a subscription model. If you look at what's happening in terms of revenue coming out of the iPhone, but going into their monthly subscription models, AWS, for instance, part of Amazon Web Services, accounts for a major portion of Amazon's profit. And so we're seeing this rotation, and good companies like Apple, like Amazon, they account for a lot of what we see in the S&P 500 and NASDAQ, et cetera. So again, where you start to see this negative news come out, how is it impacting the markets? I don't see much of an impact at all, at least for the remainder of the month. Okay. In fact, you guys all know me. I'm not a news guy. Okay. That's not my specialty. My specialty is not news. My specialty is patterns. Let's talk about patterns. So let's get right into it, and let's look at the money calendar. This is the money calendar starting today. I thought I would go squeeze in here real close. And so we see what's going on today, the 13th, all the way into the 17th. Next week is a 4-day week. We are closed for Christmas Eve. Now, for those of you brand new and you're looking at this and you're saying, where's this information at? Okay, this is something that I collect myself. And so when I look at the money calendar, what is the money calendar? The money calendar is basically, we take the top most popular stocks. I take about 325 of them out of the thousands of stocks that trade out there. Let's take the most popular ones. Let's take the ones that have tons of volume, tons of liquidity, all right? The crowded trades, the crowded stocks. And what we want to do with these is we want to look for patterns within these 325 stocks. Now, what we do is we look at patterns that start on particular days and end on particular days. And my artificial intelligence will crunch through millions of data points to find, based on a minimum of the last 10 years of data, we look to find the majority of what we like to call sweet spots in the market. Sweet spot buy, sweet spot sell. So as we come in today, the 13th, we see that there are 114 different patterns going on right now as of today with what I like to call seasonality. Of those patterns, of those 114, 86 or 75% of these patterns are bullish, 25 are bearish. The way I set the calendar up, the more bullish we see on the screen, the more green you're going to see in the background of each day. Notice that going into the Christmas holiday, I've got nothing but green on the screen. I've got a 75% bullish slant today. That jumps to 94% tomorrow, 89 on Wednesday, 98 on Thursday, and 94 on Friday. So we actually have 3 days this week where we see greater than 90% of our scans, of our seasonality, slanting towards the bull side. Okay. So you might say, well, how well does this work? Okay. Again, I'm only looking at stocks that have a 90% or greater, all right, 90% or greater pattern. Looking at, for instance, today going forward. So if we were to buy on the 13th and we were to sell sometime into the future, how did those perform over the last 10 years for these individual stocks that are popping up on the screen? We're going to look at that right now. So I'm going to pop on over and we're going to look at the money calendar. And I can see the money calendar right now. Here's the 13th. And I'm going to pop right inside the 13th because I want to see what's going on with this particular day. So here's December 13th. And I see all kinds of stocks over here and a lot of green. And I've got a lot of data to work with. All right. Now I'm going to do a little sort real quick. And I'm going to talk about what I just did in a few minutes. So a lot of green on the screen. If I scroll down, here's a red. Here's a couple of reds, but they look really small. I mean, these are small red patterns. As you can see, as we go down to the bottom of this screen, there's a lot of red at the bottom, but they're really 1 and 2 day and 3 day patterns. What I like is what's at the top of the screen. The reason I like the top of the screen is that seasonal patterns tend to do better the longer they are, right? Now, because I'm an income guy, I like to look at patterns that are around the 30-day nature, okay? Around the 30-day in nature is what I like to look at the pattern. So you can see Netflix is at the top of the screen, 30 days. What does this actually mean? I have a green bar, which tells me that Netflix is a bullish opportunity, okay? Bullish opportunity. Well, the last 10 years, this has netted profit of $300. The accuracy in the last 10 years is 90% on this. And what we're talking about is something that starts today and ends January 21st, 2022. So the pattern is about a month long, maybe a little bit more when you factor in the weekends and you factor in weekends and holidays. So we see a pattern that starts today and ends on January 21st. A couple other things I look at. When was the last time this thing lost money? 6 years ago, right? What is this power meter? The power meter is a arbitrary number. The more positive it is, it tells me that the more trendy this particular pattern is lately, means that it has actually done much, much better in recent years than it has in past years. Let's go in and take a look at this in a little bit more detail. So I'm going to come over here and click on Netflix, and I'm going to bring up all of the details I need to know about this stock. So it's a buy, December 13th to January 21st, a seasonal buy. We still need to go and check this out a little bit more. But what we're doing together, guys, is we are starting to spot opportunities. We'll get into planning that alternative risk trade, and then, of course, we can then plan, execute, manage it through our broker's platform. But right now I see Netflix, December 13th, January 21st. Let's take a look and see what's going on here. So here's our first day of trading. That's today. Here's our last day of trading. How is it done? And again, we've got all that accuracy and all that data right here. Other things I like to look at. All of you who have traded in the past, and I'm talking about not once or twice, but I'm talking about those of you that trade consistently, all right? If you're out there and you trade on a regular basis, tell me if you know and if you use something called drawdown and run up, all right? Let me know if those of you in the room here, either at Monday Morning Live or on my YouTube stream, let me know if you use max drawdown and max profit as two ideas of what you look at when you're spotting opportunity, because I certainly do, right? And so when I look at this trade and I see that in the last 10 years, between now and going into that third Friday of January, the max drawdown, the worst that this trade has done in 10 years has gone against us by 36 points. The best it's done has gone up by 98 points. So as you can see here, we've got a run up to drawdown, a profit to drawdown ratio of about 3-to-1. Okay, about 3-to-1. So when I'm going through and I'm back testing and I'm looking at patterns, I want to see a lot more of this. All right, I want to see these profits. And of course, there's the loser. It happened on 2015. And, that was down 23 points. But look at the last 5 years, up 16 on the pattern. That was 2016. 2017 had the best year, right? Up 83 points during this pattern. 2018, up 70 points during the pattern. 2019, up 58 points during the pattern. And last year, it was up 62 points. So we can see that even though we're averaging about 30 points a trade in the last 5 years, it's been more to, you can see it's kind of more up here toward the 40 area. This is important to know because if you really want to trade like I do, you got to know two things as an option trader. You got to have an idea of where that stock is likely to go and how long is it going to take to get there. And again, this is no guarantee, but this is the way that I go through and spot opportunity. We're still in phase one. We're still looking at the very first thing when it comes to spotting opportunity, and that is looking at the pattern. What worked, what didn't? Well, obviously 9 out of 10 years it worked. Over here at the end, not much. But remember, in 2011, Netflix was a lot cheaper of a stock than it is 10 years, 10 years from then to now. All right, so also, we could go into all the whys. Well, why is Netflix going to go up? Why is Netflix going up? Well, it could be because, we might see streaming services. What are people going to do the day, when we shut down? Most folks are going to take a vacation between Christmas and New Year's. All right, so think about this. Work with me here. So we're hanging around the tree or whatever it is we're hanging around, and gifts are opened, and then what happens? All right, then if your kids aren't already hopped up and passed out on candy from stockings, then you're sitting around, you're thinking, what am I going to do? You know what we're going to do? We're going to stream. We're going to stream services. We're going to binge watch. Hey, who caught Yellowstone last night? I did. All right. I missed last week, so I got to see last week's Yellowstone and last night's Yellowstone. I binge watched 2 episodes at a time. But there's going to be a lot of binge watching happening, and there's going to be a lot of folks saying, I need Netflix. I need to subscribe to Netflix. So just the hype alone could push Netflix higher during the holidays. Okay. So what we've done is we've gone through and we've looked at this, we've looked at these years, and we've determined an average of about 40 points. Now what do we need to do? Now we need to go to stock charts. All right. And I'm looking at the overall market, and I see that the S&P is sitting near its all-time highs. And then when I look at TLT, for instance, I see TLT is kind of sitting right in the range. Bonds. This is the Goldilocks theory. Not too hot, not too cold. That's great for the stock market. Moving on. What's oil doing? Hey, if you guys know me, I'm a pattern trader, and you know that oil is not a bullish area in my mind, that we're in a bearish environment. And so and you can see oil's back, USO's back down in the low 50s. So, we'll pass through that. Gold is trying its best to form that small double bottom. We've got a larger double bottom down here. GLD's trying to make a little bit of a move today, but not much at all. But what does this got to do with the stock market? I put all these together and I decide, okay, if we're not seeing an absolute drop in the S&P, in fact, it's quite the opposite. The S&P is sitting near the all-time highs. This bodes well for NFLX, the stock we've been talking about today. So let's take a look at Netflix. Now, I've got a 140-day chart sitting here right now on Netflix. Higher lows, higher lows, higher lows, higher lows. This is a higher low than we saw back in October, but we did get a bit of a pullback. How far did we pull back? Let's take a look and see if this is approaching any Fibonacci pullback. Indeed, it has. All right, looking at the lows that we see back in the June category, we can see that we pulled back almost to the 50% retracement, right? But we're now trading at or above that 38%, very bullish sign. Let me blow this up and show you what we're talking about. All right. This was the high back in July, we had a low, and these are what we call percentages off. 38% off, 50% off, 61% off. If you know me in the stock market, when I look at Fibonacci ratios, I look at the 38 to 50% area in the stock market. With cryptocurrency, a little more volatile, a lot more volatile. Therefore, I'm able to, I swing this all the way down to the 61%, but we're not talking about crypto right now. I'll spend a few minutes talking about crypto at the bottom of the 10 o'clock hour. But you can see here, we've got a little bit of a pullback. Now we're staging what could be an area of support. Mix that up with what we're looking at with Netflix. And what we see is a potential move into January. Remember the money calendar? What's the trade? Now in January 21st. So I ask myself, okay, looking at the stock chart, what does the stock chart tell me? The stock chart tells me that this trend looks good. Let's look at the options. So I'm going to go to the option chains on Netflix. And this is the part where I talked about this before. And I said, spot the opportunity. Remember, the opportunity is between now and January 21st. So you look at that opportunity. The next thing is that we are looking for about a 40-point move. And we expect it to happen between now and January 21st. So it just so happens that there are some January 21st options. This is what I'm looking for. You don't buy the December options when you expect a move to take place between now and January 21st. You look at the Jan 21 options, at least I do, right? Let's go ahead and update that. And now we're going to look at Netflix options that expire January 21st. Stocks trading around 611 and change. That was where the close was on Friday. And I can see that, if I take this number here and I add 40 points to it, where does that put me? $650, $51.66. Let's just go to 650. 650 is my target. All right. Now, do I want to be a buyer of these call options? How many of you in the room believe I should be buying these call options? If 650 is my target, shouldn't I be buying the 650 calls? Well, I think not. The reason why is because this is where I expect it to go. Okay. Who in the room has bought out of the money call options in the past, saw the stock you were buying them on actually go higher, and still you figured out how to lose money? Who's in the room that have done that before? I'm raising my hand because at one time I did that. Right? I've done it before. And now I'm seeing some of you who've been in here before, like Jagman, says, no. If that's your target, you sell that. Correct. Absolutely correct. So we want to sell this. We don't want to buy this. We want to sell the target, and we want to buy closer to today's price. Now, the next thing I want to do is I want to ask myself, how can I put a trade on in Netflix, which is a $611 stock? How can I put that on for $500? How can I put a $500 trade on? I could buy one share. It's going to cost me $611. But I want to put a trade on that actually leverages me to 100 shares of stock. And I want to do it for $500 or less. Okay. If you're interested in wanting to know how to do that, then you're at the right place at the right time. Because if you bought 100 shares of stock, let's say you bought it at $600, you're talking about 100 shares of stock. One share is 600, 10 shares is 6,000. That would be a $60,000 trade. Okay. We don't want to do that. We don't want to spend $60,000 on something that we're only going to be in now and be out of about a month later. But can we leverage this with options and do it for $500 or less? And the answer is yes, you can. And I'm going to show you how to do that right now. So if I am going to look at the target price to sell, $13.78, then I'm looking for something, 14, 15, 16, 17, 18. I need to find an option closer to where I am right now that costs about $18.78 or less. Look at the 635s. See that? They're mid-pricing around $18.73. So if I buy the 875 calls, this is called a bull call spread. Buy the lower strike calls, sell the higher strike calls. Look at what this is going to cost me. All right, if I could get that trade off. Hey, even if I give them an extra $5, if I want to do this for $5, then I've just put a trade on that now buying the lower strike and simultaneously selling the higher strike call. So I am going to give myself the ability to exercise the stock at $635, but I'm obligated to sell it at $650. There's 15 points between $635 and $650. If I pay $5 for a 15-point spread, I have the potential to triple my money on this trade or have a profit of over 200%. Okay. The reason why is because if you look here, let's look at a couple things. Your cost in this case is $495 if you can get filled at that price. That means that your maximum profit could be over $1,000, $1,005. That gives you a profit to risk ratio of over 200%. Now, the other thing we like to look at is what's called break even. Our upside break even on this trade, upside and downside are the same thing in this case, is $639.95. We need Netflix to be above this price by January 21st in order to break even. Now, in order to get to maximum profit, where do we need to be? We need to be above the selling strike. In this case, it's the 650 calls. So remember, what we're looking at here is an example here of buying the Jan 21 635 calls and selling the Jan 21 650 calls. Now, what have we done, folks? All right, what have we done? We have now created a $500 trade on a $60,000 position, greater than $60,000 position. So we have hedged off a huge amount of cost and risk, okay? And we have spotted an opportunity. Again, nothing's a guarantee in this business. You should all know that. But if we create our we spot our opportunity, we create our lower or alternative risk trade and plan, execute, and manage these trades, right? Consistency is the key. So now what I want to show you is the very third step that's involved in this. Do you know what step 3 is? Step 1 is what? Spot the opportunity. What is step 2? Create the alternative risk trade. We did that right now on my screen. And step 3 is plan, execute, and manage the trade. And what I mean by planning, executing, and managing the trade is go ahead and start to put this together and see what it looks like on your broker's platform. So that's what I'm going to do right now. I'm moving over. I got my broker's platform right here on the screen. All right. Now, again, I don't care who you use. I really don't. This is something that I think you need to make a decision for yourself, right? One of the accounts I use is Street Smart Central. It's part of Charles Schwab. But again, I do not endorse brokers. I'm not going to give you some link where you can get a free stock and I get a free stock, because I don't think that's the right way to choose a broker based on who's going to give you a free stock. I think you choose a broker based on what you get out of that broker in terms of you as a customer. All right. So let's type this in together. NFLX. Let's see what we can get this trade off for today. Because again, I can do all of the analysis on my own, but I got to know what the real price is in order to see if this is something that actually is feasible. In this case, we're looking at call spreads. All right, what am I buying? For every one I'm buying, I'm selling one. That's what a vertical call spread is. So now I look at expiration date, not the expiration date of this Friday. I want Jan 21st, Jan 21st, 2022. Why? Because the pattern is a month long. I don't want a 1-week option to trade a 1-month pattern. I want a 1-month option to trade a 1-month pattern. What are we buying? Looking at the 635s, looking at selling the 650s, and what can they be done for? Look at this, the actual spread, because Netflix is down a couple points today. This is great. You get to trade for better, but maybe go in and look at it. So I see 365 by 545. So possibly there's a couple ways you can place these orders. You could put a limit order in. If you like that at 5 or better, that is a limit order, a limit debit. It tells you that I am going to take this trade for $5 or better. Okay. Together. I don't care what the 635s are trading for. I don't care what the 650s are trading for. I only care what the entire spread is trading for. That's what I'm looking at right here. What's called the net quote. 365 by 540. So this looks easily done at around the $5 area, but maybe you could do better. Okay. Couple of things that I want to see, you want to look at and see if your broker offers. So limit orders, every broker should offer a limit order. The other one that I like is something called a walk limit. This is something that's unique to the Street Smart Central platform. However, you might be able to find it in other brokerage firms. So this is an example of going in, and it's a fishing expedition. And what we're doing is we're fishing around to see if we could get a better price. So let's say that we want to customize this trade, and I don't want to pay any more than $5 for it. But maybe I like to start it around the $4.50 area. And let's say I'm going to have this change in increments of 5 cents. All right. So what I'm seeing here, or even 10 cents, let's just do a 10 cent increment. So what this actually means, this is a specialized order, right? That says, all right, I want to put the trade in. I want to start the bidding at 450. So put the order in at 450, and for 2 seconds, see that? That order stays in at 450, and then it gets pulled, and then it goes back in for 460. And in 2 seconds, if it's not filled, it gets pulled, and then it goes back in for 470, 480, 490, 5. When it hits 5, so it's going to be in 10 cent increments until it hits 5. When it hits 5, if it's not filled, it stays at 5 as a limit order for the rest of the day. This is called a walk limit order, okay? And this again is the Street Smart Central app. You might want to see if your broker can translate something similar. But this is one of those ones where those of you who trade a lot, and you know who you are, you put the order in, you don't get filled, you cancel it, and then you replace. This is an automated cancel replace order, okay? Tell me, how many of you in the room just learned something brand new that you did not think your broker could do? All right. Hey, Eric, do you ever use any kind of walk limits or cancel replaces?
Listen, Tom, I'm learning a lot from you today. This is all new stuff to me. So I feel like I have to get my education on with you a bit over the next couple of weeks because no, I don't. So
yeah, I mean,
exciting
you know
stuff.
what? Most people don't. Most people don't because they either don't know it exists or it may not actually work with their own broker. But this is just a way of kind of automating the market. Last week, I showed everybody what an OTT order was. And I actually even do some you down with OTT? Yeah, you know me. And I promised everybody I'd make a rap song out of that. But man, I'm not in it today. I mean,
we need to deliver, not today, but we can make a later promise to everyone. That could be fun.
Absolutely. Absolutely. So, but yeah, I mean, this is a walk limit order. I use these a lot in my trading because, none of us really know where the market is. We can go out there and we see that 360 by 515, but is that 360 a real number? Is that 515 a real number? I'll throw the question out here to everybody and maybe even you too, Eric. You ever placed an order and it got filled so fast you thought, oh boy, I overpaid for that one.
Yeah, that happens all the time. You make the order and you just wish that you just drop the price a little bit, make yourself get a better deal. Of course.
Yeah. So this allows you to do that. This allows you to start, in an area that you probably shouldn't even be getting filled out at, and then just work your way closer. I like to start right in the mid price. If the mid price is say maybe 440, for instance, and then go out to 5, because you never know who might actually be on the other side that's trying to get into something that exactly the opposite of what you're trying. They're trying to either get out or get in. It's a zero-sum game. For every person out there that believes this stock is going up, there's somebody equally convinced that you're wrong and they're going to bet against you. And if they're coming in at the same time you are, you and they might get a better fill. So there you go. Walk limit order, guys. Live it, love it, know it. All right. So I wanted to share that with all of you here in the room. And let's pop on over and let's look at. We talked about the money counter, but I'm well past the 10 o'clock hour right now. So let's talk about what's cheap and what's expensive out there in terms of options. In order to do that, I got to ask the question to everybody in the room: who in the room right now is here for the very first time watching me live? Are there any folks in here that are watching me live for the first time? All right. Tom, do you ever use First Trade for your positions? First Trade, I'm not sure what you're asking about, Brian. Good, probably a very good question. I'm just not understanding it very well. Crypto Bunny's here. Crypto Bunny's going to New Zealand as soon as they open the borders. And I think I saw Mr. Badallison here too, who's going to be going to the House of NZ. But for those of you like Armin and Don, Cliff, Paula, and then, out there on the YouTube channel, I see a couple of you guys out there, daily stock prices out there. All right. For those of you that are new, then might I direct you to the Morning Report. This is an app that's out there on the it's out there on the Apple Store. It's out there on the Google Play Store. And when you download that app, you are going to get something that looks like this. Now, I will mention this. If you download this app for the first time, it's free, but here's the thing. So when you download this, and I'm going to move my arrows, it's going to look something like this when you download it. You're going to log in. If you are already a software user for Tom's Option Tools, then that's cool. You know what I got to do is just put your username and password in. You're ready to go. But if you're not, it's okay. All right. Don't let that stop you, because down near the bottom of below the area that says login, you're going to see a non-subscriber login. Just fill out that information, and then you're good to go. It will then open up to what you see, which is called the Tom's Option Tools Suite. You're going to see a lot of buttons in here. Now, these buttons at the top, these are all buttons for some lifetime subscriber buttons, and for our partners and our folks that use our tools and have taken master classes. But you have access to this one at the bottom. It's the MR, the Morning Report. Click on that button. You're going to get these 6 scans that we update every single day. I'm going to talk about these 2 down here at the bottom right now. So what is cheap and what is expensive? I'm actually going to open this up right now and show it to everybody. Here we are, cheap and expensive. Cheap and expensive are a list of options, the top 10 options that we run. Now, we run these top 10s every day. What do they mean? All right, let's start with the expensive. The most expensive options. This is a ranking of the top 10, and it doesn't mean they're the most expensive out there. They're just the most expensive in range. So I want you to think of something right now. All right. What's the weather going to be down here in Florida? Let me take a look here. The weather. I feel cold. That's because I got the chills right now. Right now, it's 71 degrees here in beautiful Sarasota, Florida, and it's going up to a high of 84. Now, what's the all-time high when we look at for a December, mid-December? Maybe it's in the high 90s. Okay, that would be the all-time high, and the all-time low might be, who knows? We might have been at 40 degrees. Okay, so we're somewhere kind of in the middle, but we're going to be closer to the highs, the all-time highs today. That would be considered an expensive temperature, if you will. Right? We set our options the same way. If you take a look at Adobe for a moment, it's number 3. The reason I'm looking at Adobe is because we all know what Adobe does. Right? When I look at the price of Adobe, let me grab a chart. So if I go over to stock charts, all right, take a look at Adobe. So Adobe closed on Friday at $654.45. All right. But when you look at the morning report has a 48 next to it, and a 21 and a 39. These are not stock prices, guys. These are option prices. Option prices, and what this is this gives me a percentage of what option traders believe the stock is going to do in the future. As fear comes in and greed comes into the marketplace, these percentages can get much higher, and therefore they're going to show up on the expensive chart. So take a look at ARGX for a moment. The high for the entire year, as far as expensive premium, 63.46. The low for the year was 37.77. Look where it closed on Friday, 63.46. It is trading at its 1-year high. These options are expensive. I don't want to buy them. In fact, I'd rather sell them if I could. NVAX, 165.63, 66.46 for the low, 144.98. Not the absolute high, but very close to the high. And you see Adobe as well. So if I click on Adobe, I'm going to get a much better visual of what we're talking about here. There's Adobe Systems. Now, check this out. The black line represents option premiums looking at 7-day to 149-day to expiration. And what it's telling us is that since about the end of October, option traders have been buying calls and puts like crazy coming in, because we're talking about something that was trading at a 25 just last month that went as high as almost 50. Now it's come down a little bit, but from the 25 area, or more importantly, from the 20 in October. What this tells me is that today, option time value, option premiums, those time value parts of an option, well, they're nearly twice as expensive now as they were back in October, right? So it's safe to say that an at-the-money option, all right, on Adobe, at-the-money call or at-the-money put, going to cost you nearly twice as much as it would have back then. So I like to be, as an option shopper, I like to buy cheap and I like to sell expensive, but only if I find a pattern, I find some kind of trading signal, right? So here's Adobe. What's going on? Why is Adobe so expensive? Because it's got earnings in 6 days. Everybody's hyped up about what Adobe's going to report. Same thing with Jabil. Okay, look at Jabil Circuit. Here's the lows, 56. Okay, so I'm sorry, that's the stock price. Over here's the implied vol price, 28 to nearly 48. What's the stock price done? It's gone up, it's gone down, it's come back up, gapped up on Friday. Earnings in 6 days. So one of the things we find a lot is that if it shows up on this expensive list here, chances are it's got earnings coming out really soon. Let's take a look at the cheap list. The cheap list shows me all of these options that are cheap as they have been in a year. Look at 3D Systems, all right? Triple D. 3D Systems, the stock chart was at 28 5 months ago, and now it's at 22. It has had highs of 40, and it had, off of its last earnings report, it had a high that was around 34. But look at that IV. See that IV? This is that option premium. Options got very expensive right up to earnings, and then they cheapened out very quick. The stock dropped, but the options dropped too. So if you're looking at 3D Systems and you believe, for whatever reason, could be technical, could be seasonal, could be anything, if you believe for whatever reason that this stock is going to bounce from here and go higher, well, then now's the time to buy calls. Look how cheap they are. The black line says they're a lot cheaper now. They're as cheap as they've been in the last year. Here's where they were the most expensive. Just, a little more than a month ago. Here's where they are now. This is cheap. But if you also believe that Triple D is on its way to lower lows, then buying puts is the best thing you could do. Okay? And so again, all of this, so I see Triple D on here. I see XLE, the energy select. Look at the energy select. So we see energy select go from the high 40s, jumped up to the high 50s, went sideways, and then look what ended up happening. We saw a big bounce up as a lot of money was piling into energy, and a lot of bets were piling into energy, what it's going to do. Didn't do anything, and look what the vol did. It crushed right back down. So now, if you like energy to the upside, call buying makes sense. If you like energy to the downside, put buying makes sense. Okay? This is all information that is available on that app, the Morning Report. And it's not, you don't do a scan, you don't do a search for Morning Report. I saw somebody come in here and say, not seeing the MR at the Apple store. Cliff was saying that. So what you're looking for, Cliff, is you're looking for Tom's Option Tools. Okay? Again, Tom's Option Tools and spaces between these. If you type in Tom's Option Tools into the Apple Store or the Google Store, you will find our Tom's Option Tools suite. It's there. Okay, so let's move into the last segment that I have for you guys today, and we'll talk a little bit about we'll spend a couple minutes talking about cryptocurrency at the end. But before we do, how many of you caught the morning session? All right, with Vaz, Kenny, Garrett, and Mark. How many of you are in here that were here bright and early at 8:30 in the morning, or maybe even before then? You were catching Garrett's pre-morning session. How many of you were in the room? Let me know, because I got something to show you. I did a little homework myself. It's funny how a lot of times we're all kind of connected, even though I have not had a conversation with Vaz or Mark or Kenny or Garrett since last week. But it's very interesting that sometimes we're looking at the exact same thing, even though we're not talking about it. So if you caught the Money Morning show this morning, then you heard the term UVXY being discussed a lot. And maybe you heard that UVXY could crush down to new lows. Well, I want to show you something. I completely agree, but I'm going to come to it from another angle. And the angle we're coming to it from is something called the holiday patterns. So I look at holiday patterns. I'm going to come back to this one in a moment because I want to show you what it is that we look at here. So when we're looking at holidays, I'll go in here and I'll type in, for instance, SPY. And what I'm looking for is I'm going to go back the last 10 years, and I want to look at what happens around Christmas Day with the S&P 500. And what I see is around Christmas Day, the 10 days before Christmas, that's like right now, and the 9 days after Christmas, we've been averaging, and here's 10 and 10, and here's 8 days before and 9 days after, we're averaging somewhere just below 1.5% move. And so I see that this has happened 8 of the last 10 years that we've had that year-end Santa Claus rally. Okay. Now we can look at this 2 different ways. I'm looking at the SPY, but I'm also looking at, well, what does UXVY, all right, or UVXY? What does UVXY have to say about this? If this pattern on the S&P is up, well, then UVXY should have a pattern that goes down. That's exactly what we found. I went in and looked at UVXY 10 years back. I looked at the Christmas holiday. Again, 10 days before, 10 days after. That's kind of where we are right now with Christmas. I ran 1,000 different tests. It took a couple of seconds. Hit that button, boom. Computer came back to me and said, hey, 9 days before, 10 days after, 9 days before, 9 days after, 9 days before, 8 days after, we're getting a lot of red on the screen. Red means that UVXY goes down at and before, all right, before and after Christmas. So spot the opportunity. Next, create the low risk trade. So if we look at UVXY, we can look at it on a chart here. All right, UVXY. What's it been doing the last 5 days? I mean, it's been insane. This thing being at 23 last week, and now it's trading down into, it's around the $15 area right now. All right, could this go down into the 12s? Could it go down into the 10s? Very likely it could. So here is where I see, I spotted a seasonal pattern. I see a trending pattern. This thing trends down all the time. And part of it's because of contango and because of management fees, et cetera. With some of these products, you have a management group that gets paid to manage the product, right? Happens with ETFs. But take a look here. So we'll go look at UVXY. And here's UVXY. Let's take a look at a stock chart of UVXY. I want to show that to everybody first. So in this case, UVXY, and we're not going to look at 5 days. We're just going to go out and look at this thing. Look at this thing. It was at 36 back in July. Came straight down. Look what ended up happening. This is a Fibonacci resistance area right here at 25.13. It stabbed above that and traded right below the 38%. And that was last week. And here we are back down near lows. All right. So it wants to trend lower. In this case, let's take a look and see what kind of option strategies they are on UVXY. Now, I could look at UVXY with January. I could also look at it if I really want to kind of go in and see what's happening toward the end of the year when nobody's trading and there's really no news coming out. Maybe December's the area we want to go for. So if you look at the Decembers, here's a 14.5 put with a December expiration. Here's a 15 put. 15 put December expiration. If you believe that UVXY is headed to 12 and you buy the 15 put, okay, let's go look at what this looks like on a risk graph. If I'm buying that put, I'm going to pay a little less than $1, around $190. All right, if this goes down to 110, then your less than 2 points can become more than 3 points. You will more than double your money on this trade. Even if it goes to 12, you're talking about 190 becoming 3 points. That's greater than a 50% return which I actually like on, if you know something about me, guys, then you know that when I'm looking at ETFs, I'm looking for 50% returns. I'm not looking for hundreds or 200s or 500s on an ETF. I look for 50s. Most of the time it's because an ETF is a basket of securities. This is not, but it kind of is, because it is the expression of volatility across long-term volatility across what? Across a lot of the stocks that are out there, many, many stocks in the basket. Now, if this doesn't make sense to you, then perhaps looking at the SPY and taking that upside move on the SPY. That's another one you could look at too. Okay. So SPY could look at calls, could look at call spreads, looking for that year-end move. This is not a day trade though. All right. We're looking at minimum 2 weeks, maybe even 4. Right. If you wanted a day trade, I actually know what, Eric, I actually day traded. I do a little bit of day trading, not much, but I was watching Apple on Friday. Apple was hitting those highs, and I thought, you know what? If we get above that high, I want into some 1-day call options. I actually took last Friday's calls on Friday, bought the at the money calls on Apple, and sold them probably 2 hours later. I actually sold them right around, I want to say 3 to 3:30. I think it's 3:30, and I missed that 5 minutes to 4 move where we just saw this explosion happening. But that typically doesn't happen. But I took my 50%, return. I was happy with that.
I mean, at least you made money, right? If you wait, sometimes you could be wrong and you could lose all your position, no?
Yeah, and especially with if you get at the money calls. Now those went in the money a little bit, but at the money calls, that last few minutes of, that last 15 minutes, those things just deteriorate and they can become worthless. So I wanted to be out of those a half an hour before close. I did not expect what happened, but it's okay. I'll take my 50%.
Still made money.
Absolutely. So what I showed you guys, once again, spot the opportunity. Okay. We do that with seasonality. We do that with volatility. We do that with technical analysis. And then create that alternative risk trade. Maybe sometimes all we're doing is, and very little times do I do, is buy the stock or short. But those come with a heavy price tag, especially shorting stock. And then finally, there is, once you create that, if you create that option trade, whatever that trade is, you're planning, you're executing, you're managing through your broker's platform. All right. Got a few minutes left. Let's talk about crypto.
Yes. So thank you, Tom. That's what I'm talking about.
So what have you seen over the weekend? You seen anything over the weekend that, with cryptocurrency?
I mean, things were a little bit more stable over the weekend, but I mean, I tuned in this morning and everything is dipping pretty hardcore. It's a good day to buy.
Yeah. Yep. And that's what our team is saying right now too, is that they like the positions where things are right now. Things are a little bit cheaper than they were on Friday.
Yep.
And so, I like the levels we're at right now. In fact, when I look at Bitcoin, I look at a couple different things. I'll come out here on the Thinkorswim platform and I'll look at BTC. Now, why is Bitcoin dropping right now? Because the overall market, which came in on pre-market highs, everybody was talking about this market never goes down. It never goes down until it goes down. And that's what happened with the overall market. And what's happening is Bitcoin is reflecting the overall market. But you know what? We're still hanging out near those lows that we saw last week. We're still hanging out in what I think is a very good area. And so, when I look at things like some of the stuff we talked about last week, some of the altcoins we talked about last week, the engines, even ADA. All right. Hey, I'm down on ADA on my account, but you know what? I look at that as a longer term coin. That is a longer term hold for me. And so I look at ADA and I'm actually looking at possibly adding to my position in ADA because I like it as a long-term coin. All right.
Hey, Tom, let me hop in. I got a question for you about Cardano. Do you stake your Cardano as well, or do you like to have it readily available for trading?
I have it readily available for trading. I tell you, I'm not a huge staker. Okay, I'm in this game. I'm in here as a trader. However, I've been looking at a couple of different things to stake the bigger coins. To stake the Bitcoins and stake the Ethereums of the world. I understand you do some staking.
I do. I stake my Cardano because it's one of my biggest holdings, and I'm also quite down on Daedalus, on a Daedalus wallet, which is nice. It's on my computer. It's not on a platform. It's a little bit safer. But you could stake, your Bitcoin, your Ethereum over on a platform like Nexo, and you could just pull it out pretty easily, I believe.
What do you think of Celsius?
I heard that there was some issues in talking with Nick Black. There were some recent things where he believes it's not a platform to trust. How about you?
Yeah, I've heard the same thing. I've heard the
Yeah.
same thing. If anyone who's talked to me and knows me, I typically stay where I'm at, like bank vault safety. We're
Mm-hmm.
talking about Coinbase, but you don't get the kind of staking. I don't think you get the kind of staking numbers in Coinbase that you could in different areas. Have you seen that?
I haven't done any staking in Coinbase. And to be honest, I live in New York. So there are so many restrictions being a New Yorker. I can't
Yep.
use, what is it? Nexo, I believe. I think it was Nexo. I was in it for a little bit. And then about a month later, after having my Ethereum and Bitcoin staked, some news came out saying we were no longer going to get staking rewards. So I'm in a tough place if I want to do it all legit. I have to,
Yeah.
play by the
Dare I
rules.
say, dare I say the words VPN?
Yeah, I know. That's next level, next step.
Those are that's an acronym we're not allowed to talk about on here.
Yeah.
And I won't, and I don't tell anybody. I'm not endorsing it anyone at all to use VPNs. You'll never hear that come out of my mouth, but a lot of people look into that in those areas that they may not be able to trade. I don't. I live in Florida, so we're a gunslinging state here, Eric.
I know you are.
We have a lot of freedoms, and the freedom to trade cryptocurrency is definitely one of them.
Hey, Tom, instead of using a VPN, I could just come visit you every time I need to make a deposit. Just log in by your place, do it completely
absolutely.
Legit. Yeah.
Absolutely.
We'll get there. Nice. Let's get back to it.
Yeah. So, guys, to kind of summarize some things up, UVXY, it's telling me to expect a continued move higher in the stock market. And so that's where I wanted to kind of, if I were to kind of summarize a few things, and I do want to look at a chart of Bitcoin and not today's chart. I want to go back and revisit, and I've got some really interesting numbers for all of you to pay attention to. But microcurrency traders, listen, guys, if you just joined me or you didn't join me at the top of the hour, I'm a little sweaty today, and it's not because of any positions that are going against me. As you know, I'm a rules-based trader, and it's not that at all. It's that I caught something over the weekend, all right? And I think it's the flu, all right? I'm not positive, but I think it's the flu. And if I don't feel any better by the end of the day today, then I'm going to get that PCR test or rapid test, whatever test I can get a hold of, just to see if, is there anybody in Florida that has Omicron? I don't want to be patient zero, but anyway, I got to find out what's happening here. But anyway, we'll do a quick little look. But I am skipping the 1 p.m. today, guys. So I apologize. I just can't. I can't do it. I was thinking to myself at 9:30, how am I going to get through this hour? I think I'm doing a pretty good job getting through it. I guess Advil's my sponsor for the day. But before we get going, let's take a quick look at a chart that I think is a very interesting one. I basically blew this up, and I wanted to show this to you. And what you have right here are some very interesting points on the fib retracement levels. Okay, we're trading around that. So this is our high. This is our closing high in BTC. The closing low on BTC, you got to go back and look at the end of July, and you'll see that closing low just below the 30,000 mark. Right, we take that 30,000 mark up to 67.5, and Eric, you don't know this, but I'm going to let you know, and some of the other folks on here. 69,000 was the high on BTC. Why 67.5? Because 67.5 is the closing high that we look at when we're looking at Fibonacci support resistance. So when I look at that closing high, then I look at percentages off. We're from the low to high, 38% off puts us around 53,127. The 50% off level puts us at 48.6. 61% level puts us at 44.2. Typically in the stock market, I look for pullbacks that are in between the 38 and 50% level. In cryptocurrency, because we literally have double the volatility, then we've got to look and give ourselves a little bit more loose terminology here. So we're in that 50 to 61% retracement level. I like where we are right now. Where I would not like it is we close below 44.2. 44.217, it closed below that, and that means we could rotate and we could be in for some more moves to the downside. And again, if you're an investor in crypto, or even if you're a trader, all right? If you're a trader, what does it mean? It just means setbacks in my mind. Setbacks where we're not going to see it move as fast to the upside, right? But I still have some incredible targets on Bitcoin, Ethereum, and the likes. And those of you that are microcurrency traders, we do have a new coin that is going to be coming out for microcurrency. That is going to be coming out here, I think, within the next couple of days. We see some really interesting setups that are coming off of this weekend. These kind of like setups, we're seeing them, we're scoping them out, and it's just a matter before we look at pulling the trigger on one or two of those. So be on the lookout for those. I got a new watch list that's coming out. I was going to talk about it today, but I'm not going to be able to do that. But I will be sending all of you the watch list later today, those of you that are microcurrency traders. So that being said, Eric, thank you for coming on and debuting on our first show together.
Hey, I hope you feel better. I feel like we start working together this week. You get sick. You're trying to make me have an easy week to kind of break into the Tom Gentile show. But I hope you feel better, man. It stinks to be sick.
Yeah. Well, thank you very much. And I want to thank all of you guys for joining me today. You know what? I'll be back here tomorrow, 9:30. We will get on to it hot and heavy again then. Thank you all so much. Have a great rest of your day. Chris is up next. We'll see you then. Bye.